Okay, folks, welcome to Sunday Night Stock Charts Live. This is where we're going to review the economic data going into the next week, a few of the headlines off of zerohedge.com, and I want to follow up on Thursday's conversation with regard to the yield curve. We spoke ARL, HTLB, you got it. We spoke at great length with regard to the yield curve on Thursday night. I want to follow up with it because a lot has changed. One day can make a difference. And then we're going to segue over and into a couple of stock chart requests. And then, of course, we'll wrap things up with the futures action. And there's a headline out this evening out of I thought it was a symbol. Hit the like button. I love Yeah. Uh, that's the best. You got me there. Yes, if you could hit the like button, that would be great. Thank you very much for that. And we move on. Good stuff. Good stuff. All right. So this coming week, what we have going on is not much on Monday. We have the NEHB Home Builders Index. That's not going to move the market. Housing starts, no big deal. Building permits, that's always an interesting one. It's a forward-looking indicator. Actually, this is from last week. I wonder why it sounded so familiar. Sorry about that. This is the hazard of being live. Hey, Patrick, how's your weekend going? I got your email. Thank you. So this week we have Jay Powell speaks tomorrow night, 7 p.m., so we'll see what he has to say. I doubt there's going to be much more than what he had scripted from last week. On Tuesday, we have consumer confidence. That's a market mover. Wednesday is big. It's really, really big because we have the GDP revision for Q3. Then we have durable goods, Chicago PMI, consumer spending, core inflation. A lot of data. And then you have the Fed Beige Book coming out as well. And then, of course, Thanksgiving. And before I forget, if you're checking out earlier this week, you're going to be traveling, and I don't get the opportunity to say it. Happy Thanksgiving. Many prayers to you and your family. Have a great time. Enjoy. And let's get to it. There's a news item that came out late this afternoon, just in time for the commentary, and it has the potential to be a market mover, and I'm going to let the futures market settle down here a little bit. I'm going to presume that we are. Hey, Tom. That I'm going to presume. Thank you, Patrick. Thank you, RL. I'm going to presume that the futures markets are probably in the positive area right now on this headline, and the headline is this: in an apparent trade war compromise, China issues guidelines for IP theft. This is huge, huge. I didn't think that they would come out with anything like this, so we don't want to get steadfast in our opinions of what will or will not happen, and we want to keep an open mind and trade accordingly. So this is a game changer. If they make it enforceable, and to make it really enforceable, the Trump administration has always said that you need to make it part of your law. Will they do that? The Chinese have not been known for following through on their commitments. Let's face it. Just look at the guarantees that they made vis-a-vis their entrance into the World Trade Organization. They haven't lived up to anything. So the headline is great. It should goose the market. I haven't looked yet, but we'll take a look in a moment. But this is a step in the right direction anyway. So we'll see whether or not the market's going to lift out of it, and on that lift, and on a step towards a trade deal, do you get a sell on the news event? And that's what we're looking at. That's our contrarian mentality. Moving on, we have some German banks in trouble. Negative rates bite. Bundesbank fears financial stability risk. Moody's downgrade outlook for German banks. This shouldn't be news. We've been talking about Deutsche Bank for well over a year. I put out videos about it. The stock price certainly implies that the company has got a lot of problems, and it appears as though Moody's is getting ready to do a downgrade, and now the markets are just prepping, or the headlines, the news media is now prepping the headlines for the news. And I didn't know this about the German banks. They have a ton of unlisted savings banks that collectively account for over half of the banking system. And those banks, you need to assume that they're making money on loans, which requires a positive interest rate. I don't know how they're making money over at these banks. I need to do a little bit more research on them, but I don't know how these savings and loans are behaving profitably. So it looks as though the German banks are really coming under pressure now. So I would expect on this type of a headline, if they follow through, weakness in the euro, unless, of course, you get strength in the euro. That means that you may have seen a bottom for the euro, and this is just simply expected, and maybe a move down for the dollar. But the trend is probably going to be at current, dollar up, euro down. Let's move on. So on Thursday night, on our live session, we spoke about the 3-month yield curve and then the 2s versus 10s. I'm going to go over both charts because on a monthly basis, the shorter duration yield curve closed about on par with where we were on Thursday. No great big change from Thursday's price action. Where you saw a major change was 2s versus 10s. And we were seeing signs of a steepening of the yield curve earlier on in the week. We had given up all those gains. We were still positive on Thursday night. By Friday afternoon, we closed negative. And I warned that what was a lower band of support on this bear flag setup might actually become an upper band of resistance. And it appears to be what we have setting up right now is an upper band of resistance at a prior support level on the yield curve. So do we begin to see a resumption of the move lower on the yield curve? And as I mentioned on Thursday, don't worry about the first leg up on a steepening of the yield curve. Worry about the pullback, the resumption of the yield curve, the second leg down, and then the steepening thereafter. That's when the stock market comes under pressure. Now, this may not happen for months. Could be 3 months, 4 months. Doesn't mean to go sell your stocks tomorrow. It's just an observation that we're making, and we're certainly not going to short the market based upon a bearish key reversal. But we only have a few trading days left to go in the month, and this is not good. It's not good. The bond market is sending us a signal, and this could carry through to the 2020 elections before the markets begin to roll over. But things are not looking good. And folks, I didn't mention immediately after this live session, I'm going to send out another link. We're going to have a members private group session. So members, stay tuned for that link, and we'll get started at about 7 p.m. tonight, and I'll see you there. And I will go over a couple of member stock chart requests now. And the first one up is UGAZ, everybody's favorite. Let's pull back on here. Let's see how we closed out the week. As a matter of fact, the month is almost over. Let's take a look and see how we are poised to close out the month. And this is not the right chart. I know it because this thing had a hell of a month. There we go. That's better. Forget the monthly. This is not looking right. Let's go to the weekly. Okay, so weekly view, we had our alert triggered last week as we hit the upper band of resistance. We didn't break out, but we hit. I'm going to change this alert up here. Nice bullish key reversal bar last week. And we did trade down below key support and we reversed to close back above it. Very bullish price action last week on UGAZ. So when would we want to add more? Or when do we not add more? We don't own it. When do we want to open up a position here? Ideally, on a breakthrough, forget about touching anymore. On a breakthrough, on a weekly basis, weekly breakout, and we're going to keep this active for a couple of weeks. And I want to set another one here because we are within a tight trading range, and it's not beyond the realm of possibility that we do a pullback and a retest of recent support Hey, blockchain. Happy Thanksgiving to you too. Futures are up somewhat. Okay. We'll take a look in a moment. UGZ. All right. So we're good. Let's keep this active. Again, 10 days. It's a weekly chart. Trigger twice. And we're golden. So, in short, we're looking for a retest of support. If we get that on light volume, we will look to open up a small opening position and then add more on a breakout above this upper band of resistance. And RSI weekly basis looking good. Stokes are rolling over here. Let's look for a flattening out and a hook up on a weekly basis, daily chart. Daily chart, same parameters here. We're looking for a retest of support and a breakout above this upper band of resistance. A good day on Friday, an attempt to break out. That breakout was rejected. We're going to go over oil in a moment, Tom, right on the futures. We'll take a look at it then, all right? Okay. Now, let's Google is another one. You bet, Tom. Let's start with the weekly chart. Ooh, not good. Outside reversal week last week. Google could quite possibly come under some pressure this coming week. Daily chart. We were consolidating, and we closed down below support on Friday. It looks like we're coming down here to bare minimum $12.85 per share. RSI declining, still above 50. Stochastics are very, very weak here on Google. I would avoid these shares, and they're setting up for a possible short. Tom, Bob, I have to get back to you on my subscription. I was out of town these past few weeks. I'll ping you after Thanksgiving. Yeah, cool. No worries. Whatever you need. I want to take a look at the banks. The banks did really well on Friday. We were down through Thursday. You bet, Tom. We were down through Thursday, and then on Friday, we flashed a bullish reversal bar on the week. So a very, very nice setup. And this is the regional banking ETF. Let's first take a look at the XLF. I don't know how I got back there. XLF. That's better. Okay, so weekly chart. I'll tell you, with yields as low as they are, the banks are looking really, really good. I have to say it. We broke out on the 4th of November, or the week of the 4th, I should say. Sorry. We've been consolidating. It looks as though we're setting up for a continuation breakout here on a weekly basis on the banks. So, bullish stuff. Taking a look at the regional banks, weekly basis, not as strong, and that makes sense because of yields being so low. They don't trade. They don't have the trading operations as the money center banks do. But they're looking all right themselves. So the banks look interesting into this coming week. The semis, though, I'll tell you, are not looking that great. Look at this price action last week, an outside reversal week. I think we're pulling back further here. So those are some of the symbols that I wanted to go over and some of the more chart requests. And I want to follow up on the weed stocks. I mean, CGC just had a huge short covering rally last week. It wasn't really a surprise, but it didn't meet our criteria for entering it. RSI never dipped down below 20 on a daily basis. I'll go over that chart in a moment. Before I do that, let's go to Kronos Group. Weekly chart. Our price target has not been hit. Our alert is set here. It has not been hit. I wouldn't go buying. We did have a short covering rally last week. Then sellers moved in, just simply validating our prior thesis in that we know that we have, this is the wrong line. We know we have resistance immediately above. Right at that 7.33 level. So I'm going to be looking for a continuation pullback here on Kronos, daily chart. So nice short covering rally. The question is, do we put in a higher low here or do we break down? Do we see a continuation breakdown on Kronos Group? I'm betting the latter. I think there's still more downside risk here. I could be wrong. And if the markets tell me I'm wrong, they'll do it by saying, okay, here's our higher low, and then you'll see a breakout above last week's highs. And then I'll have to revisit the trade thinking, okay, maybe I'm wrong on the trade and that I need to think about, if I want to get long of it, think about paying up because we're seeing higher lows and now higher highs. And I wouldn't do it on a daily basis, probably look at it more on a weekly basis to ensure that that downtrend is coming to an end. So more to come on Kronos, CGC, and then we'll go over to the futures. So here was the short squeeze of last week. Huge, huge. The low of the week was 13.81. The high of the week was 21.55. Nice move. If you were a part of it to the long side, congratulations. RSI never came down to us. We came close. RSI's lows, I think it was around 23. I would like to have seen RSI well below 20, down around 15, 17, around that level. It wasn't to be. The shorts took control, or the longs took control and squeezed the shorts for the short term anyway. I think that we're probably going to pull back further, do a double bottom retest, or we'll look for a higher low. Hey, Method, happy Thanksgiving to you, my friend. Happy Thanksgiving to you and your family. Thank you. All right, let's go to the futures action. Let's see what's going on. So the headline, yeah, we're gapping up here. So the headlines are favorable to the market this week. Now, the key to remember is that this is going to be a very light volume week. It's going to be an abbreviated week on light volume. So just be forewarned. It's the perfect environment. It's the petri dish of manipulation. It's a perfect environment. And we're going to see this through beginning tomorrow through January the 1st. So we're spiking up at current. No shock here. Positive news out of China. Whether or not the administration embraces it, yet to be seen. They probably will. They don't want the markets tanking in front of the election, and we've been steadfast on that. We covered our short on the Russell 2000 on Friday afternoon. I'm sure when I go to that chart in a moment, I'm going to be happy that we did. So the futures gapping up at current. Path of least resistance is resuming to the upside this week. Taking a look at the Russell. Moving up higher. And this is what I was afraid of, was this very, very tight consolidation, this very tight trading range. And, we had broken down below this support level a couple of times while being short. And we didn't close there. We closed down below it here, but we didn't get a continuation move lower. And so I said, you know what, I'm not fighting this. Then on Friday, I just didn't want to go into the weekend short, worried about a headline coming out like we just got. And sure enough, they're spiking it up at current. They didn't break it out yet, but they're very, very close to it. Probably by tomorrow morning, it'll be broken out. 40,000, there's the man. Did you read the full statement on IP by China? Yeah, I'm sure it is. I know it's the headline. Did I read the whole thing? It only came out shortly before we went live. So I'm simply going by the headline and what the administration will do with that headline. They'll take the statement, they'll twist it into it's going to be a phase one deal, and they'll send the market higher. The details of the article, I'm sure, are an absolute joke. There's no commitment. I made that comment earlier. I doubt there's going to be any follow through, any substance on IP theft. But it's fodder for the administration, and they're going to take it and they're going to spin a win out of it. I guarantee the president's going to be tweeting about this, and it's going to send the markets higher. Again, folks, we predicted that the markets were going to break out. I've been saying it's for all the wrong reasons. I continue to say that. I think that the mother of all shorts, they talk about the big short back in the financial crisis. That's nothing compared to what we're going to see this time around. But the worst thing you could possibly do is look at the macroeconomic data, which is bad, really, really bad, and just simply bet that the economy is going to fall apart and short right now. The news cycle is not in your favor. The Fed is not in your favor, and they are taking these markets up higher. And until we begin to see real cracks in the system, and ideally after the 2020 elections, I'm reluctant to get net short of this market. You just can't do it. So there may be an opportunity, maybe a geopolitical event that causes us to get short, but at current, I can't do it. I can have all the courage of my convictions that I can have. That doesn't make me right. Let's take a look at the mid caps. They're gapping up higher. Really nice W formation forming here. Back in I think it was 2015, I started getting bearish on the markets because I was watching Congress, and the banks went to Congress. It was the Bankruptcy Reform Act. I believe it was 2015. I'd have to research that. I'll go and check that out. And I'm wondering, stock market's ripping through the ceiling. Economy's doing well. Why are the banks so worried about the need for bankruptcy reform? And that's what got me worried about this economy that we were looking at that point in time was a phony economy. And in reality, it was. The home builders were beginning to see weakness in their earnings, yet the share price continued to skyrocket. And that's when I started saying, this is all going to come to a bloody end. And I was driving through, Route 10 out of LA and into Phoenix. I think it's Route 10 or Interstate 10. And all I saw pulling into Phoenix, I'm talking about 10 miles, 20 miles outside of Phoenix in the desert, just miles and miles of houses in stud work. And they weren't finished. They were just in studs. And I'm saying this is unsustainable. And it was soon thereafter that we began opening up a short position, but I was early and I had to eat my tale of woe about why the market should be tanking with all the resets and the refis, in the teaser rate, adjustable rate mortgages. And until the market broke, I was wrong. I was early. I was wrong until it broke, and then we were right. So this time around, I want to show a little bit more discipline in terms of opening up that short position and appreciate the fact that the market could stay far more irrational longer than we could stay liquid, a solvent. So that's our attitude at current. Let's check out the dollar. That's probably spike or maybe pulling back. Usually the dollar pulls back on positive trade data out of China. Let's see if I'm right here. It's up. I'm wrong. Okay. We're actually holding support here. We had a good week last week. So the dollar is up, and it broke out last week above resistance. Really good price action on the dollar last week, and this probably means that gold is getting hammered at current. No, not hammered. It's down. All right, so gold remains within the trading range. The dollar's lifting up higher. Let's check out bonds. We'll go to the 10-year. And folks, for those just joining, if I could ask you, can you please click that like button? It really supports the channel by helping us with the YouTube algorithm. I have these guys out there, I'm talking like 22, 23-year-old guys, and they put out a couple of videos. They get like 10, 15,000 views. And I'm like, what are these guys doing? I can't figure it out. So if any of you out there are YouTube gurus, help me out. Tell me what I'm doing wrong. It drives me crazy. And they have 100,000 subscribers. It drives me crazy. They're better looking than me. Maybe that helps. Probably so. Okay, so the 10-year bond price, this is not the yield, but the price, we're pulling back. No shock there. So it's going to be a risk-on day tomorrow. Is that how we close out the week? Probably. But you never know, right? So definitely risk on going into Monday morning. And we'll stick with our strategy. We have a gold mining position. We're going to continue probably on this news. If we close strong tomorrow on the market, I'm probably going to open up another round. We're currently long of some covered calls expiring on December the 20th. We're long of NUGT, the NUGT 40 strike expiring December the 20th. I'm probably going to open up some weekly contracts this week. I don't know how the premiums are going to be. It's an abbreviated week. And we're going to see a pullback on NUGT in the morning probably. I don't know how good the premiums are going to be, but we'll give it a shot. Yeah, thank you for that. I love that. I appreciate that. Believe me, my ego needs a boost. Good. That was good. All right, what else do we have here? Nat gas. Nat gas spiking. Wow, look at this. All right, so on this 4-hour chart, we are spiking up above and we closed out the week last week above the third standard deviation Bollinger Band on a 4-hour basis. So just be forewarned, definitely don't go chasing nat gas. Extremely volatile. It can stay overbought. But remember, we went out on Friday overbought. We're opening up on Sunday night, well overbought. We shouldn't be trading above this line. We are, okay. We'll probably get a pullback, and then you could look to open up a position. And UGAZ, remember, we have our trade alert set up there. UGAZ is the leveraged ETF for nat gas. If you don't want the volatility, yet you want to be long of nat gas, simply go with UNG. Just keep in mind, well, Thursday, I don't know if they're going to do nat gas inventory report on Wednesday of this week or if they push it to Friday, one of the two. But Thursday, normally we get the nat gas inventories report. Just be aware, we're not going to have that report on Thursday, maybe on Wednesday. Tom, Bob, think about what companies these millennials like and invest in. They are super smart in the way more in tech and social media. True, very true. And you can never imagine. Yeah, no doubt about that. Yeah. Disney. All right, I'll throw up a chart of Disney. And with that, we are going to segue over into the members segment. And we will bring up Disney. Let's take this down. Bring up I'm having a technical issue here. Okay, let's bring up Disney. This is a weekly chart, a daily chart. I don't like the daily chart already, I could tell you. So Disney has a lot of overhead resistance here. I want to stay on this weekly chart. As a matter of fact, let's go to a monthly chart. Let's pull back. Yeah. So I'm going to go back to the weekly chart. I'm going to overlay both weekly and monthly overlays here. And you'll see that we have monthly resistance above. We're right there. We hit it the week before last. We were rejected. We hit it back here the week of July the 29th. We were rejected. We hit it again last week. We were rejected. So I wouldn't be a buyer of Disney until we closed above this upper band of resistance at around, what was the high of the week? 149.48. But keep in mind that even if we close above that level, you're going to have resistance right above on a weekly basis. So ideally, you get a pullback to this lower band of support here. I don't know if you're long or short, but were I not long and I was looking to open up a position on Disney, I would be looking to open up that trade right here at, let's call it 145, because this is a rising upper band of support. 145, then look to add on a rally up and through this upper band of resistance on a monthly basis. And then you have this rising upper band of resistance here on a weekly basis. So just keep in mind, you have a lot of resistance above. Let's go to a daily chart. And you can see on a daily chart, I'm going to remove, this is the value of TrendSpider with their multi-time frame analysis. Take off there the monthly chart, and you wonder, why is this stop dead? Last week and the week prior, why did it stop here? And rather than taking a crayon out and drawing a drawing to understand why, all you need to do is click a button, monthly resistance. So, stiff resistance up here. Now, if we close above it, then you can look to open or add to your position. But just be careful. I would look to tighten up stops here on Disney. On a break below Friday's lows, on a closing basis, I would look to lighten up a bit on Disney. I already went over Nat Gas, so you want to just do a rewind on Nat Gas and check that out, sir. You're welcome, Raymond. And with that, folks, members, we're going to segue over and into the intergroup private session. Sending out a link in a moment. And, UWT. Tom, you're not joining? All right, UWT. That's right. You have... Oh, UWT. That's that one symbol. Yeah. Is this right, Tom? You want the crude oil ETF, the leveraged ETF? UWT. I thought you were looking at another one. We were looking at another one a couple of weeks ago. Similar symbol, or is this the wrong symbol? It's UWT? Okay. All right. Before we go over the chart, let's bring up the futures action on oil. We'll go with the light sweet crude price. And we're up on a 4-hour basis. Some selling on Friday afternoon. All right, so I'm just getting a feel for how we're trading in the futures market at current. Now let's go back and do our deep dive. We'll begin with a monthly view. Tom, I'm going to go over USO. There's more data there. It's going to look at the same as UWT. There's more data. Yeah, very similar setup here. But more data for the monthly chart. Okay, so let's talk about the macro and the non-technical view of oil. There's no way that the president is going to allow the price of oil to go to new 52-week lows. It's not going to happen. Oh, and by the way, if you didn't hit the like button, for those just joining in, can you hit the like button, please? It helps me out with the YouTube algorithm. There's no way the president's going to allow the price of oil to drop. And I continually repeat this for those that are new. The frackers, highest paying jobs in America for those that don't have a big education. Any average Joe can get a $100,000 a year job at a fracking company driving a truck, doing whatever. So those are valuable jobs, and those are Trump voters. They're not going anywhere. So the United States is the highest cost producer of a barrel of oil, the Saudis being the lowest. So they can't afford, meaning the frackers, they cannot afford to have the price of oil break down to new 52-week lows. We have already sent more troops over to Saudi Arabia. We just sent a new aircraft carrier battle group through the Straits of Hormuz. They're going to keep the tensions ratcheted up over there, so the price of oil keeps a bit under it. That is my tale of woe with regard to oil and why it's probably not going to break down. And now we'll go over the technicals. The technicals, setting up favorably. We have a higher low. Now, what we're looking for here is a breakout on a monthly basis, and it need not necessarily be a monthly basis, but we're using the monthly chart to identify history. How are we behaving? Where have we been? Where might we be going? And it appears as though the downtrend is over. We've rallied. We're pulling back, putting in higher lows. Now all we need to see are breakouts to new higher highs. Weekly chart. RSI is setting up good here too. Stokes, higher low, breaking up, hooking up. Weekly chart. So the weekly chart's looking good. We rallied well last week. However, we closed off the highs of the week, and that was that selling that we saw on Friday afternoon. Remember that 4-hour chart I just went over, that down bar in the final 4 hours of trade on Friday? That is what influenced the topping tail on this candlestick on a weekly basis. Let's overlay some monthly. All right, so nothing to concern ourselves with monthly resistance here. Let's go to a daily chart. All right, so daily chart on Friday was not wonderful. And I think that we may see a fade of this evening's price action on oil. So if we trade down below 12 spot 08 on the USO or on the UWT. We'll go to the UWT now. We'll talk about that on a daily chart. We have plenty of data there. Let's use the 12 spot 25 level on the UWT as support. We need to hold it. If we don't hold it, at a bare minimum, we're going to come down here, fill the gap that opened up here on the 21st. I fear, though, that we'll probably pull back and do a retest of the breakout point, which is right here at 11 spot 48 the share on UWT. Let's check out a 4-hour chart really quick. All right, we're struggling to hold on here. Maybe we will. If we hold on, if you're looking for a price target, we could rally up to this upper band of resistance here, which is rising. I don't want to give you a number. Then the primary resistance level number 1 is going to be at 13.28 the share on UWT. But just be careful. This is a 4-hour chart. Daily chart takes more precedence over a 4-hour chart, obviously. So just watch for a pullback here on UWT. Let's go back and check out the futures. I want to see if we're fading at all here. Not much. Not much. So I'm not loving oil on a daily basis. I don't like the setup right now, but that could change by the end of the week. And with that, folks, I have to get me some TrendSpot. Remember, take my discount. CT. Use the discount code below if you want it. There's a link, and the discount code is CT25Z. You get 25% off. And if you join silver or gold, you get it free. So with that, that's my pitch. Folks, if you haven't already done so, if you can hit the like button, I'd appreciate it. Subscribe. And members, we're going to segue over into, at 7 p.m. tonight, our members inner circle, the private group session. Expect a link to that in a moment, and I will see you there. Everybody have a very, very happy Thanksgiving. Thanks for spending your Sunday night with me. I really do appreciate it. And enjoy your Thanksgiving with your family. Be safe and be well. I got to do the pitch. Blockchain, you bet, brother. Be well, guys.